From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for April 27, 2017. In just a moment, we'll be taking a look at the NZDUSD, the New Zealand dollar, versus the US dollar for today's trade analysis. But first I want to recap yesterday's trade suggestion here on the USD CAD. Yesterday we were looking at potential resistance and reversal here for this currency pair. If we go back to the left-hand side, the two black circles, you can see the last time we were here, resistance, and both times reversed and went significantly lower all the way down into the 1.3 thousand range. So here yesterday we were looking at a very similar situation, coming up into resistance, and we were looking for potential reversal. Well, it did shortly. Yesterday during the trade room we saw about 25 to 30 pips of profit. Shortly towards the end of the trade room, the market went down a little bit. We were able to see profit where our trade manager took us to break even, so we protected the trade from going negative again when seeing 30 pips of profit or 20 pips or more. The market turned around, went back up, took us out of the trade with break even, so we didn't lose anything on the trade, went significantly higher up towards the mid 1.36s, and now here we are coming right back down. So I think it's a very similar situation today where we're looking for the market, and if we zoom in a little bit here, we're looking for the market to stay essentially underneath that pink shaded area. So we've seen the last 3 days challenge it, so far unable to stay above 136. So we'd like for it to stay underneath 135.95, 135.75, which is the pink shaded area. Take it down to the 4 hour, and you can see that price action from yesterday where it just rallied above. I'm trying to make that black circle not so big. It rallied above, and now we're right back underneath. That big red candle is quite nice for a potential clue to reversal. Again, we saw 30 pips on yesterday's trade, taken out at break even, now looking for a new opportunity over the next several hours here for the US CAD. Moving on now to the NZDUSD. It's a similar situation actually, except flip it upside down, and now we're looking at support. Instead of using the circles, I use the black boxes here to show support. Let me go ahead and zoom it in one time here. Support over here on the left at the green zone, support in the middle of the chart at the green zone, and now we're here challenging it today on the right hand side. So a similar situation. One of two things is going to happen here at the green shaded area. 6,900 down to 6,880 is the green zone. It's either going to give us clues to support and reversal and start working its way back up, or it's going to give us clues and a trade setup for a breakout and go down. Well, the current momentum is bearish, and I think there's nothing really to change that at the current moment. So let's stick with that. Let's stick with the bearish momentum, and in this case, instead of looking for the reversal, unless we get clues to it, let's watch for the breakout underneath 68.80 and the continuation down towards the blue zone, which will be our next target on the way down here for the New Zealand dollar. Let's go ahead and take it down to the 4 hour time frame. And as we get down here, look at this. We had the one bounce off of here, went all the way back up to 69.20, the yellow zone, and now we're significantly pressuring back down towards 68.80. So again, what I'm looking for today is the significant evidence of a breakout. We often talk about what a breakout is in the live daily trade room, but essentially we're looking for a candle body to open and close underneath the green zone, 68.80, to improve our confidence that it's going to continue to go lower. Until we see that, you can't have improved confidence, or we can't have a higher probability that it's going to go down. So far, the market's been unable to sustain a breakout underneath 68.80. That's what we take by this right here, is so far been unable to. So we want evidence that shows us that the market is able to break through that green shaded area. And for us, that evidence will be a significant open and close under the green zone, maybe even running its head in retesting the green zone as resistance once breaking out underneath it to give us lower risk and higher reward. And then we follow it all the way back down to the blue zone and near the 6,800 level as our target. All in all, we know what the risk is. If we sell under the green zone, the risk is that it gets back above it. Now again, that's no guarantee. It may not do that. So we want to watch for evidence in support. We want to watch for evidence of reversal from this support as well. I don't think we have sufficient evidence of reversal to go back up yet for the New Zealand dollar. So we'll watch for evidence of reversal to go back up. We'll watch for the breakout. That tends to be what I'm leaning towards here for the New Zealand dollar. And again, if we go back in time and just take a look at the last time, the black box right here, the market came down, reversed and went back up. So hit it once, came back down a second time, and went back up. So that's evidence of reversal there. And then, of course, in this time frame right here, you can see it came down. It actually got underneath it right here, but eventually making new higher lows and reversed and went back up. So again, over the next few days, we'll watch for evidence of reversal, and then also we'll be watching for the evidence of a breakout here for the New Zealand dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.